On the same day I did a pre-recording where I was speaking at Juanita Jackson. I see her. She made a comment saying hello. Spoke at her event as well, and that was awesome. She said it turned out to be terrific, and maybe when she does this again, we can get her on so she can talk about her event.
Right. Absolutely. So let's get to the industry stuff. It's not that bad.
No, it's not bad.
Sales are down because,
well, because let's see. I think people are done. There's so many reasons. Why do you think they're down?
Mortgage applications are down because there's limited inventory, and there's people that want to buy. They're just getting frustrated because they can't
find out what
they
they
don't want
want.
to get into the bidding wars.
Well, and I think prices have gone up too high for people. They're finally getting smart. They are, Bill, because we've got houses that they're out there, but they're sitting on the market longer. They're
cooling. They're priced too high.
Well, that's exactly right. So I think everybody was seeing it. They're buying like crazy, so they're pushing the limits on what they're putting out there. So it's just cooling off a little.
And again, it depends on location. Real estate is local.
Yeah.
And it just depends on where you are. I've got several neighbors that have been there for 20 years or more, and they sold their houses in a week. They're all closing this week.
Yeah.
That said, if you don't have a place to go, you're not putting your house up for sale.
Yeah, that's true too. So I got this off of a housing market update. The source is from Redfin, which many of you heard it. So the housing market is showing some cooling trends. It said home sales with a price drop increased to 4% for the first time since September. So what that means is that houses that were on the market, they increased their price. The 4% of are now decreasing their prices. Pending sales are down 11% from the 2021 peak. Asking prices have been flat since May. Now, that's not really happening around the Southeast. It's because, there are bigger cities that they take all this stuff from, and it's really national that they do it. But we always follow suit, don't we?
Here's the thing.
Has to get normal at some point.
If your bad news is that asking prices are flat, that's awful, isn't it?
Yeah.
I mean, you go back a few years to the single digits 2000s.
Yeah. Yeah.
And then you get into 2010 to 2012.
Mm-hmm.
You're happy to see this.
Well,
it has to slow down a little bit because it's got to normalize a bit.
Absolutely.
But the bad news is still good news.
Yeah. Gosh, if the bad news is that bad, what's the good news? I mean, there's really, really, real estate is still the greatest investment you can make.
Yeah.
It's still a great time to buy and sell property. It's a great time to be an investor. One of the things that I think we all need to remember is that even in 2008, when everything was about as ugly as it could possibly get, people were still buying and selling property.
Sure.
So it's all relative to what's going on around you.
Yeah, and I'll give you an example of the first home that I bought. Jimmy Carter was president. My FHA mortgage rate.
Dang, you're old.
I was 19.
Yeah.
So I bought very young. But again, interest rates had gone up to 18% after that.
Right.
So I still got it on the lower end. It wasn't the peak then either.
Yeah.
That said, I qualified for state bond money to help me with my purchase. Because again, I was 19 years old. I was just out of school and working in my chosen at the time field.
Right.
And they subsidized your interest rate,
Right.
not your down payment.
Right.
Because rates are so low now, they try to subsidize your down payment.
Right.
Back then, rates were so high, they tried to subsidize your rate, which worked out great. So my actual rate was 7.25%. And investors were still alive and well then, because I wasn't in my house a week, and I'm getting bombarded with mailers from all these investors wanting to buy my house.
Because it was assumable,
it was
too,
a
right?
non-qualifying FHA assumption, which meant all they had to do is give me cash down and they'd take over my
Yeah,
payments.
those were the good old days.
And when I had a 7.5 or a 7.25 and everybody else was at 14.5,
Oh yeah,
it was just piling on. So there was plenty of people still investing.
absolutely.
And then at the same time, there were plenty of sellers that were willing to do seller financing
Yeah.
at a lower rate to sell their homes.
Yeah.
Homes still were bought and sold even during.
Well, you know, we've got the moratoriums being lifted too on evictions and foreclosures. So I think we're going to see many more houses flooding into the market. I'm trying to remember who it was that said, because that's going to flood into the market, they believe that it won't matter because all of these big hedge funds are going to buy them up anyway.
Well, that's what I was going to say. It doesn't. There's not going to be a flood, and even if there is a flood, it's not going to make a dent in prices because.
So we don't have to start lining up 2 by 2 and getting on a boat. From
Yeah,
it.
no, inventory is still going to be low because hedge funds are buying up these houses just like they had been before, and
Yeah.
they're paying more for them than they should. So
Yeah.
they're going to bid up the prices at auction.
Yeah, yeah. We'll see what happens. It sure worked for them the last
Yeah,
go
the last
around
time
that they did
it,
that.
absolutely.
It sure did.